No economy in the world has ever developed without a strong backup of the manufacturing sector. Intra-trade in ESCs is less than 15%. The world is an open market, and whether we like it, we'll definitely have to compete with other products coming from other countries.
Hello, and welcome to Industry Today podcast, The Pulse of Manufacturing. This is a production by the Kenya Association of Manufacturers, in which we'll explore the trends, look at the opportunities, as well as the challenges that are shaping Kenya's manufacturing sector. And this is our premiere show, and we are delighted to dive deep into the Kenya's manufacturing outlook for the year 2025. This is indeed a pivotal year for the country and for the manufacturing sector. And today, we are delighted to be hosting a voice of industry, somebody who has been at the helm and worked with manufacturing for the last close to 2 decades. Today, we are honored to have our guest, the Chief Executive Officer of Kenya Association of Manufacturers, Mr. Tobias Alando. Welcome to the show.
Thank you, Lawrence.
Are you feeling that now we are starting a new podcast, especially focusing on manufacturing sector?
It's really exciting. The conversation around the manufacturing sector needs to be heard by everybody, both the players in the manufacturing sector and the young people and even the decision makers in this country.
Absolutely.
So I'm excited to have this podcast running.
Absolutely.
Yes.
And indeed, we are excited.
Yes.
So I think we can dive into it. Today, we'll be looking at the manufacturing sector. We'll be looking at the overview of where we've come as a sector, especially in the last couple of years, looking at where we are, also looking at what is ahead for this critical sector.
Yes.
And just by starting, probably we can just start with what is the overview, in your view, of how the manufacturing sector has been shaping up, especially in the last couple of years? What would you say has really been happening within this critical sector?
So the manufacturing sector has not been growing as expected. The last time we had double-digit growth was in 2021, where our contribution to the GDP was about 11.3. After 2021, we've seen a decline, a downward drop in terms of our contribution to the GDP, which is worrying and is a great concern. And therefore, our mandate is to see what can be done to enhance the growth of our contribution to the GDP. If you look at the recent survey, Economic Survey 2025, it shows that the manufacturing sector has grown slightly by 2.8%. But however, if you compare the same growth with our counterpart, Tanzania grew by 8.3%. That shows you there's something that we need to do. Kenya is one of the biggest economy in the region, and there's no reason why the manufacturing sector growth is only attributed to 2.8. We should be growing much faster than we are growing today.
Okay, very, very well, articulated in terms of where we are, especially as an industry. And probably somebody may be wondering, you've been mentioning that the sector has actually been on a downward trend. Does this mean that manufacturing is actually shrinking, or does it mean that other sectors are doing better than us? What is the real nominal value of manufacturing, especially looking at the GDP contribution in terms of wealth creation for the country? Where are we at the moment?
So the manufacturing sector, our contribution to the GDP for a long time has been at around 7.6. The recent surveys indicates that it's declining by another 2 points, so probably we are at around 7.4, 7.3, 7.4 in terms of contribution. However, in terms of employment by sector, sector-wise, we contribute about 11% of employment in this country. We employ about 360,000 people, which is massive. And in terms of our contribution, in terms of revenue contribution, we do contribute about 18% of the total tax revenue collected in this country. And that shows you that the manufacturing sector is indeed a force. We have an ambition. The last time we met the president in 2008, and we had a discussion of about increasing the manufacturing contribution by around 20% by 2030. It's an ambitious target. And if we do that, all factors remaining constant, then we will employ over 1 million people. We will be able to contribute over at 1 trillion Kenyan shillings in terms of revenue contribution. If all factors remain constant, I believe the manufacturing sector can be a game changer. Looking at the economies in the world that have done well, the manufacturing sectors has grew.
Okay. Interesting. And probably just before we close that chapter, especially looking at the overview, perhaps some will be wondering how has been more significant, especially in terms of looking at the fiscal policy, looking at the regulations, and looking at the policy framework that we've been operating. What would you say has really been significant and its impact to the manufacturing sector over the last couple of years?
So there are a couple of issues that have impacted the manufacturing sector over the years, particularly in terms of that decline.
Yeah.
And one of the major factors we see is the unpredictability of the tax and policy environment in this country. And we've had government making policy decisions that have inhibited the growth of the manufacturing sector in one way or the other. We did pass what we call the national tax policy. And the national tax policy provides a very good framework where the government will not raise taxes for a period of 5 years. And with this gives the investors and the industry players good time for planning. So if we adhere to the national tax policy, then definitely we will see a couple of changes and impact in the manufacturing sector. But raising taxation, raising or changing policies frequently indeed impedes the growth of the manufacturing sector. The other second issue that has had an impact in the manufacturing sector is what we call the pending bills. In this country, in the last analysis we did, there are about 800 billion pending bills, both from the national and the county government. This needs to be addressed. Now, pending bills, of course, includes issues also of VAT refunds, which has had implication on cash flow for business. It's estimated that there are about 15 billion in VAT refunds. So pending bills need to be addressed in this country to enable circulation of the economy, and to enable cash flow for business, to enable businesses and industries also have money for expansion. So we need to address that. The third issue that generally has impacted on the growth of the manufacturing sector is the illicit trade.
Yes.
And we've noted that there's an increase in a lot of illicit trade, and it's estimated that the government is losing about 120 billion because of non-taxed items coming into the market. So we need to address a lot of illicit trade concerns because it's eating into the market share of many companies, many genuine companies that are employing people in this country. The fifth item or the fourth item that has affected the growth of the manufacturing sector is what we call levies, fees, and charges. There are numerous levies, fees, and charges introduced by ministry, departments, and agencies, and even county governments. For ease of doing business, I think we need to have a control mechanism or a control department that assesses any increase or any introduction of levy that will have an impact on the manufacturing sector. So these are the conversations,
Yes.
these are the few things that we feel that have affected negatively to our growth.
To our growth.
Yes.
Absolutely. And I think one of the ways as an association you look at addressing some of these issues is that every year you come up with some areas that are of priority.
Correct.
To the sector. Please take us through what are the priorities, especially for this year, and what is that you launched for this year? What are you focusing on?
So every year we launch what we call, based on the research that we've done, what we call manufacturing priority agenda.
Right.
Identifying key points where we feel if government is able to address, then it will have a trajectory impact towards our growth of the economy and towards our growth towards the increase of the GDP contribution. And so when we launched the manufacturing priority agenda, we identified a couple of things that we feel the government needs to address. One is the global competitiveness.
Yes.
We are in what I call a flat world. We are competing with our counterparts in the region. We are competing with our counterparts in Africa as a continent, in Asia, in America, and all over the world. We are competing.
Yes.
Therefore, any products that are produced in Kenya should be able to compete with products all over the world.
Absolutely.
So global competitiveness is a key for us, and we have identified issues around taxation in the global competitiveness. We have identified issues around the cost of energy,
Yes.
which has a large impact on our competitiveness.
Yes.
We are about 70% more expensive in terms of energy costs in the region, and even as far as comparison with our counterparts in Egypt and South Africa. So the government really needs to address the issues around the cost of energy. The second pillar that we have identified that will lead to our increase in contribution of the GDP is what we call export-led growth. There are many opportunities that we need to close to increase market access for our products. There are agreements that have been signed, which is in line with what we are promoting in terms of market access. The EU EPA giving us access to about 300 million people. AFCFTA giving us access to about 55 countries with about 3 billion or 2.4 billion population. And they say accessing, when you do business in Africa, you access almost 50% of the world GDP.
Indeed.
So access to markets is a priority, and export is also a priority in terms of the pillar that we are focusing on. The third pillar that we are focusing on is the SME development. SME are a key pillar of our growth as a manufacturing sector, and SMEs need to be supported. So we have identified that areas where SMEs need to be supported in regards to, of course, accessing markets, and there's also accessing to affordable finance for their growth. So we are prioritizing SME in our manufacturing priority agenda. The last item, which is a very good linkage between our farmers and our processor, is what we call agriculture for industry. There is huge potential in farming, but we've never had a system where a farmer is guaranteed of offtake. So if they farm their produce, they are guaranteed of offtake. They are guaranteed that whatever they farm will be collected by industries. So we have created a linkage that will provide that conversation between the farmers and the industries. A lot of things that we import, for example, importing tomatoes, yet we can grow tomatoes and make importing tomato paste, yet we can grow tomatoes and make tomato paste. So we have looked at different value chains, and we've seen an opportunity towards establishing industries for processing. So overall, those four pillars are our priority in terms of global competitiveness, SME development, agriculture for industry, and export-led growth.
Good, good, good. Thank you, thank you. I think that was a very good explanation. And Tobias, just picking one of those strategies, especially on global competitiveness. I think the main question in many people's minds is that you've expounded that with Kenya, doing business in Kenya, you're accessing about 50% of the
world.
global market.
Yes.
And I think the biggest challenge has been, especially just looking in one of those markets, and probably you can help us by expounding what are these opportunities that we have under the AFCFCTA, and then also looking at how is Kenya's competitiveness compared to our peers regionally. For example, Egypt, which is becoming one of the most competitive regionally, and also looking at our neighbors, looking at Uganda, Tanzania, especially knowing that we are within the EAC framework. What would you rate and say is our competitiveness, and how what is affecting us, and probably what can we do as a country to be able to take and tap into these opportunities?
So for a long time, Kenya has been the leader in EAC in terms of industrial growth.
Yeah.
But however, as years have gone by, you've noticed a lot of investment in Tanzania and some in Uganda in terms of industries that have come up.
Yes.
Our biggest, if you look at EAC, our biggest market has been Uganda. Almost 30% of what we export
Yes.
goes to Uganda and Tanzania. That already shows you those are key markets. However, things have been changing. Those countries have also been investing.
Yeah.
And when they invest, there is competition comes in.
Yeah.
What we largely or traditionally would have got from or sent to those markets are now produced in the same market.
Yes.
And so we need to look for other markets.
Yeah.
But we generally also look at the cost in terms of competitiveness. If you look at their power cost, it's slightly cheaper.
Yeah.
If you look at their taxation regime, is slightly different. They do not have IDF and RDL that we pay.
Yeah.
So already your cost competitiveness becomes different. It becomes more expensive in Kenya. If you look at Africa, AFCFTA presents us, and that is why we need also to maintain our existing markets, but also look for other markets. And Africa, through AFCFTA, presents us a very good opportunity to access the African market that has been largely untapped. We say Africa exports almost 80% of their raw material, which is not good.
Yes. And mostly in its raw format.
It's raw format.
Yeah.
You export everything in raw format. We need to start processing.
Good. Tobias, so let's just peel back and look at Kenya's competitiveness, especially in our region. You know, we're looking at a market like AFCFCTA, the opportunities that it has, but also we're exposing ourselves as well to competition from our regional peers. A country like Egypt that is showing a lot of potential in this space. The question is then, how can Kenya tap into these opportunities within the AFCFCTA? And also, what are the challenges that we're facing as a country, and how can we take these opportunities moving forward?
Okay, so I'll start by saying, you know, the pie is big.
Yeah.
We need to avoid this closure and protectionist mentality.
Yeah.
Because the world is an open market, and whether we like it, we'll definitely have to compete with other products coming from other countries. And also other countries will have to compete with the products coming from Kenya. So if we have that mentality, then definitely we are going to utilize some of these opportunities, particularly on AFCFTA. But I would say is based on the lessons that we've learned in terms of the EAC trading block. EAC as a trading block, we've been trading, intra-trade in EAC is less than 15%. And that's a major concern. If you look at the EU, for example, they trade between 55 to 60%.
It's massive. That's good.
The inter-trade is amazing.
It's amazing.
It's massive.
Yeah.
So the fact that we have lessons from the ESC in terms of the inter-trade, that should not apply to the AFCFTA. AFCFTA should give us an opportunity in terms of trading amongst ourselves, buying raw materials and selling finished products amongst ourselves, and also removal of non-tariff barriers that would impede trade between the African countries. The financial systems, I know the central banks around Africa are working around the financial systems that will allow financial transactions. Once you sell your goods, then will allow financial transaction and ease financial transactions between countries. And that's a plus for us. So AFCFTA is indeed a good opportunity, but let's have the lessons that we learned within our different trading bloc, the EAC COMESA and the SADC, and then not to do the same mistakes. But I look at it as an opportunity for our local manufacturers.
Okay. And probably, how can we spur the intertrading within Africa? As you're saying, less than 15% is pretty low. What is that thing that African states need to do, not just looking at Kenya, but African, so that we can now start trading with each other? Instead of, as you said, exporting over 80% of our raw materials, then importing the same finished goods into African states. What is this thing that African countries need to think about to really jumpstart this conversation?
So Africa countries need to, one, invest in infrastructure. Because even as much as we want to move our goods from one point to another, the logistical cost may be expensive.
Absolutely.
And therefore, African governments need to invest in infrastructure. The other thing that African governments need to focus on is around the cost of energy. The cost of energy, with the reduced cost of energy, will reduce our competitiveness and will make us competitive in terms of our production. So we need to factor that issues around cost of energy. The third thing that we need to do as African government to promote AFCFTA is also around, I mentioned the financial transaction, financial systems to enable financial transactions move without one country feeling I'm losing in terms of export or I'm gaining and the other one is losing. So establish financial systems that would allow intertrade among African countries would be a very good plan. The other issue is around political stability, because without political stability, without security, then definitely we are not be able to move our goods from one part of the country to another. So peace and stability of the continent is also very good in terms of promoting economic growth and in terms of promoting businesses and interaction within one country and another in Africa. The fourth thing that we need to do is about technology. Improving our technology. Technology will be key to support transaction. Technology will also be key in terms of production. So we need to, and efficiency. So we need to have the African countries invest in technology. ICT now is a main thing. Is a main thing. And AI, we are going to AI. We are going to robotics. A lot of things are changing in the world, and Africa needs not to be left behind. So we need to be way ahead, and in terms of implementing on these things. Our children, our generation, the younger generation, Africa has the largest young population in the country. So the young generation needs to be involved in business in one way or the other, because the younger generation is a huge workforce that, if not fully utilized appropriately, then will turn into something negative. So the younger generation also needs to be involved to promote this intra-Africa trade.
Okay, indeed. And now maybe focusing domestically, because also domestic market is equally important.
Yes.
And I think I'm surprised that not attacking devolution in any way, but sometimes I look at our country and I feel like we're almost equivalent to the US. US has 50 states. I look at Kenya sometimes like we have 47 states because we have one country and 47 nations. I mean,
yes.
and of course, definitely this affects how businesses is done. You have 47 counties that have different policies, different levies, different finance act. How is this for manufacturing? And looking at how they trade in the intercounties, and how is this affecting manufacturing in generally?
So we've seen a very huge challenge in terms of the counties, particularly inter-county trade, where counties are charging a lot of fees and charges and levies for movements of goods and products from one county and to another. So the counties are no longer becoming or creating environment for business to thrive, but rather they are becoming an impediment to the growth. And it reaches a point where we need to have a deeper reflection as a country and say, is this what was envisaged about the counties?
Evolution,
About particularly devolution?
Yes,
is this what was really envisaged? And what do we need to change?
Yes.
Is this sustainable? Is the 47 counties sustainable? Because they're too big to manage, and they're too big in terms of introducing a lot of bottlenecks. And as a country, we need to have a deeper reflection, because where I sit, the counties need to promote businesses, but rather than their only point for collecting revenues. I mean, you collect revenues, but then you close businesses. So what sense does it make?
Doesn't make sense at all.
It doesn't make sense at all.
Yeah.
So on the counties, I think we need a deeper reflection and see what we need to change.
Absolutely,
Yes.
absolutely. Yeah. Well, Tobias, we're still hopeful. There's still room for, thinking how we can, jumpstart, troubleshoot this. And probably maybe just a quick focus. I know you've done deep dives across all sectors. Maybe you can give us, as a hope for the country, what are some of the sectors you feel like, we really not fully utilizing the potential we have as a country, both domestically and looking at the external market? What are some of these sectors you feel there's more that we can offer as a country?
So as a manufacturing sector or manufacturing organization, we have about 14 sectors.
Yes.
And food and beverage sector is one of the sector that has really, really grown.
Yes.
And it has huge potential for growth. In fact, it is estimated that can grow faster than expected. Because as the population of the country increase, the population of the continent increase, we still need to provide food and related beverages.
Yes.
So that's one of the sector that has really grown. The sector that I'm foreseeing that will grow will grow very fast.
Yeah.
Particularly is the automotive sector, and deep diving into EV. Because if you look at where the world is going, the EV platform has grown and is continuing to grow. We've seen a lot of investment in EVs in this country, both bus, electronic vehicle, and motorcycle. So that sector has a potential for growth now that we are promoting green manufacturing. So that sector indeed is going to grow. The other sector under the chemical and allied is the cosmetics and women beauty products. That also has a huge potential, which I feel we've not tapped much. Looking at the number of smaller companies that have invested, there's still huge opportunities. But the main drivers, if you look at the bigger energy consumer, cement and steel, are the sectors that really need to be well taken care of, because their ripple effect in terms of the economic impact is really huge, both in the building and construction sector. Otherwise, all the other sectors are minimally growing as they should, but a focus should be on specific drivers that have positive impact to the economy.
Indeed.
Yes.
Now let's shift gear a little bit. Last year was a significant year, especially in the conversation around the fiscal policy with the finance bill. It is the year that the Gen Zs called for accountability from government. And I know Kenya's Association of Manufacturers was actually leading this conversation in terms of the public participation around it. My interest is not necessarily what happened last year, but looking this year. How is KAM engaging government, engaging different stakeholders through the budget making process, through the finance bill that has just been tabled in Parliament? How is KAM engaging stakeholders? What is our engagement plan for this year?
So, as Kenya Association of Manufacturers, we engage with our various sectors to get that input. So, we have a very good plan in terms of sectoral engagement to look at the impact of the proposals that have been given and also to provide recommendations. So, we do that in a very transparent way. By the end of the day, we want to have a positive economic impact in the manufacturing sector. What happened with the Gen Z getting agitated should not happen again.
Yes.
Because if that happens, then we are all affected.
Absolutely.
Both as a private sector, as government, and we are all affected. So we want to have a platform where we are conversing about these issues and the government listens. Not hear us, but
Listens to us.
When the government listens to some of the proposals, I believe then we're not going to have this negative impact. Because our interest is the interest of the country.
Exactly.
So we've had a couple of conversations with different ministries, particularly Ministry National Treasury and the Ministry of Investment, Trade and Industry. And we'll continue to do this engagement with other principal secretaries and other ministries to ensure that our proposals and our views have been considered. We are also engaging with the Finance Committee of the National Assembly to provide our input in terms of the finance bill.
Yes.
And we're just hopeful that when we initiate these conversations, they will take in our inputs.
Indeed.
Yes.
And I think one of the other critical things that we realized from last year, finance bill advocacy, one was the need to involve youth in manufacturing and also looking at other critical sectors or other critical groups that are important in this conversation. So we're looking at the youth in manufacturing, we're looking at women in manufacturing. Just take us through, especially looking at women in manufacturing, probably the youth. What is KM doing around these key critical sectors of the economy in driving manufacturing? What is KM doing about it?
So our priority is to get the young people involved in the manufacturing sector. Traditionally, manufacturing sector has been left for the elderly people.
Absolutely.
And so we are trying to demystify and change that perceptions that has happened for a long time. And hopefully we'll be getting also the youth in such conversations that we have today to enable them get involved in the manufacturing sector. Another category that we've also put in line is the women in manufacturing. Again, traditionally, manufacturing sector has only involved largely men. But now we've changed that. We have a Women in Manufacturing caucus led by Marianne Musangi, which has been very, very vital towards promoting women in manufacturing sector. They have held a couple of activities and have seen a lot of impact in what they do. And we'll continue as an association, we'll continue supporting that category of women in manufacturing to ensure they grow, to ensure that they get access to what they need in terms of knowledge, in terms of priority, in terms of legislative knowledge and in legislative issues. So we'll ensure that we support them because we need women to also be involved in the manufacturing
Absolutely.
sector.
As we start concluding this conversation, Tobias, I'm looking and I'm very positive, I'm very optimistic in nature. I know the situation has not been very, very positive, especially looking back the last 2 years, not just domestically, but also globally. What is the hope for manufacturers? What is the word of hope you can give out to manufacturers as we are looking into this year and probably even looking into the next couple of years as we have, as a country, the Vision 2030 blueprint? What is that hope you can offer manufacturers?
So the reality is that no economy in the world has ever developed without a strong backup of the manufacturing sector. And that shows you why priority needs to be given to the manufacturing sector. And our hope is that with the areas that we have identified as a key challenge in terms of the national tax policy, predictability of the tax environment, opportunities to allow incentives for exports, particularly dealing with the pending bills, and VAT refunds. Definitely, we are going to see a trajectory and a growth of the manufacturing sector. So I'm very optimistic that with what we are laying down in terms of conversation in the manufacturing sector, there will be a policy shift that will impact positively on the manufacturers. So I'm optimistic that this year we will see a change. This year, next year, we'll see a change that will reflect the growth of the manufacturing sector.
Indeed. And likely so that there is no any economy that has developed without manufacturing. And probably this is a question, what would you advise the policymakers we have, especially knowing that a couple of years ago, Kenya was being compared to, to the Asian giants, the Singapore, Malaysia. What is that thing that we need to think or do differently from policy framework perspective that will drive the aspirations of manufacturing sector moving forward?
We need to be very open-minded in terms of policy decisions. The fact that we previously have had a double-digit contribution to the GDP as a manufacturing sector demonstrates that it is possible. So we just need to look back and say, what is this one impactful thing that we need to do? If it is tax incentives for the manufacturers, then let's do it. If it is issue around dealing with the pending bills and VAT refunds, then let's deal with it. If it is about the policy environment, then let's work on it. So we all know what needs to happen. What we need to do is just the action of not doing it is what is pending.
Indeed. Thank you so much, Tobias. This has been a very good, candid conversation. Really, thank you so much for the insights that you've offered us, taking us through the overview of the manufacturing sector, and also for your time. And we're really hopeful that we can have a good sector that is thriving, that can really be at the center stage of creating prosperity for this country. And now that brings us to the end of this podcast. Thank you very much for staying in touch with us. And it is our hope that you've been informed, you've been inspired, and you'll continue building this country. My name is Lawrence Jenga. Until next time, it's bye-bye for now. And if you've liked our conversation, please make sure that you subscribe to our YouTube channel and also follow us on the various social media platforms that we have. Until next time, it's bye-bye for now. Thank you.